I'm Virginia McGathey here on the floor at the CME Group reporting on the grain market today. Soybeans were soaring. Finally, we haven't seen this in quite a while. The weather delays in the harvest really had the futures break out to the upside finally from the channel that we've been stuck in, really grinding higher. It was adding to the rally that started really in September 19th, so a couple of weeks ago. Commercial longs are still at their all-time low, and it makes it kind of interesting that they didn't really jump on board, but there's been other factors in there. The bulls really pushed through the 888 resistance number, and I think once it had a little bit of a look at it, it really pushed that November contract right through it. Some profit taking ensued there, but these weather delays really lifted the futures, and it looks like it's going to create a lot more volatility and push this market higher. So in spite of the fact that we were expecting big yields, and no one's looking back right now because the weather is still cold, wet, rainy, snowy, and that's why also corn is rising. The crop damage is a real possibility, and so we're watching that. With the exports at an all-time high here, the problems in the field is an issue, and so it's keeping futures, churning higher and higher. If you take a look at the chart for corn, we haven't seen these prices since October 20th, and normally this isn't a season that we normally would see the market start to rally the way it is, but we normally have not seen a rain, snow, and wet weather keeping the fields from being harvested right now. But we're going to be on a wait-and-see basis to see if there is actual crop damage, and at that point, then we can kind of assess just what the yields would be. But as it stands right now, the market's still looking very good. Now, wheat was a little bit mixed, and then it started to rally after that, but there was no follow-through in these markets, and that's what kind of stalled it. I mean, we were down on Thursday, then up on Friday, then back down as we started today, and then we got a little bit of help from the corn and the soybeans, but the funds are net short the wheat, and mainly the funds are net short really all the grains. But however, the firmness in Friday's rally is kind of hanging on to this market, certainly with the wheat, and kind of pushing it a little bit higher today. So we're really still stuck in a channel with Chicago wheat kind of higher. Kansas City wheat was a tiny bit lower, so a little bit of a mixed bag, but still positive that we haven't broken back down, and we're up at the December wheat contract up at the 520 level. So any idea that we're going to be breaking down below the $5 is pretty much a moot point at this point. But we're watching very closely. We need a little bit more to have some follow through, or maybe to give us more direction if we're really going to take off from here. That's all from the floor at the CME Group here in Chicago. I'm Virginia McGathey.